A wise, wealthy man once said, plan and control everything you can. Everything else, get insurance. Today, I'm going to be talking about life insurance. I'm going to be talking about some of the misconceptions and how you can use life insurance to protect and build wealth for your family, all in this episode. Hey, what's up, everybody? I'm Alex, host of Black Wealthy and Wise, the number one podcast for helping Black families escape financial slavery and create financial freedom so you can live your best life and leave a legacy for your family. If this is your first time tuning in, please like and subscribe. So, hey guys, today I am going to be talking about a subject that many people don't like to talk about. Many people uh, have misconceptions about what it's all about. And today I'm going to be talking about life insurance. So, I'm going to be sharing with you what life insurance is. Hopefully, we're going to clear up some misconceptions. And we're going to talk about how you can use life insurance to build wealth for your family. Before we begin, hey, if this is your first time tuning in lately, as you can see, I got some new merch on, some new merch. So we have Black Wealthy and Wise t-shirts that are available. And so I'm going to leave a link down below in the description. And I hope you guys go and cop one of those. And I also have Black Wealthy and Wise mugs that are available. So hopefully, if you get an opportunity, I would absolutely love it if you support the podcast and go and grab one or the other, or one of each, or several of each. So hopefully you get an opportunity to check that out. I'll leave a link in the description below. Let's get right to it. Life insurance. What is life insurance? Life insurance is basically like any other insurance. It's an agreement between you and an insurance provider. And essentially, it says that a certain amount of money, cash value, or death benefit would be paid upon your passing away. So that's basically life insurance in a nutshell. And that's the reason why, I know a lot of people don't like to talk about or discuss life insurance because it involves your, it involves your life, right? And so some people don't like to think about the idea of their mortality. But there's one thing for sure: all of us are leaving this place. That is 100% sure. And so the question becomes, how do you prepare yourself? How do you prepare yourself financially and prepare your family for when you're gone? And so the question becomes, either you're going to set your family and loved ones up, right? To move ahead, move forward after you're gone, or you're going to wind up setting them back. And hopefully, uh, by the time by the time you're through listening to this episode, I hope you see the value and importance of setting your family up. Biblically, it says, a good man leaves an inheritance for his children's children, right? And that's what we want to do. Now, some other people don't realize that life insurance actually has some benefits for you while you are living, and we're going to talk about those. Life insurance falls into two main categories. There's term life insurance, and there is permanent life insurance. I'll deal with term first. Term life insurance is a life insurance that is only good for a certain period of time, usually somewhere between 10 to 30 years. That's how long life insurance stays in force. All right. Permanent life insurance is designed to be enforced your entire life for the entirety of your life, right? So uh, that's the main difference between the two. Term life insurance does not build cash value in the policy. Okay. Term life insurance is considered what they call pure life insurance. It's just straight life insurance. It covers you for a certain period of time, has very few bells and whistles to it. It is, it's straightforward, right? Now, permanent life insurance actually does build cash value in it. So I'm gonna talk a little bit more about it, but this cash value has some really, really unique benefits. Okay, term life insurance, either you use it or you lose it, right? So if you happen to pass away within the 10 to 30 year, whatever the term of your policy is, if you happen to pass away during that time, then your beneficiary would receive a benefit, a death benefit that's paid out to them. That death benefit, by the way, is tax free. It is tax free. So many people use it. What is it for? So it's for someone who maybe has a smaller budget, okay, or for someone who really wants to cover something specific, okay. That specific something could be you want to make sure that the house is paid off, or your child may be going to college within, say, the next 20 years or so, right? Or 25 years or 30 years, whatever it is. And so you want to make sure that you're able to, if something should happen to you, that your child's college is taken care of. So you may set aside some money to pay off the house, take care of kids' college, and maybe some other assets. That's often how people use it. Many times, people want to make sure they get life insurance that is as cheap as possible. And if you're looking to get life insurance just to cover a certain few assets or a certain number of assets for a specific period of time, then term life insurance is great for that. So, you want to make sure that you're with a reputable company, right? And that you talk with someone who really is going to who has a number of companies that they can potentially put you in contact with or work with, right? So I highly recommend that you work with someone like me who is a licensed independent advisor and broker. Okay, so I work with many different companies, not just one. Okay, so that's term life insurance in general. Now, the thing about term life insurance, like I said before, it does not build cash value. Either you use it or lose it, but there may be a way that you can actually get your money back if you live longer than the term. Okay. So if you happen to have a policy, a term life insurance policy that's, say, over 3 years old, I highly recommend click the link below or email me, get in contact with me, so you can have a policy review. I highly recommend a policy review every 2 to 3 years or so to make sure that you have the latest, greatest, and the most up to date uh, coverage you can possibly get. Okay. So, permanent life insurance, there are actually four different types of permanent life insurance. Now, let me just say for this as well. Um, Historically, in the past, many times we had people, a life insurance agent would call you or come by the house, and they would peddle and push burial life insurance or funeral expense, right? Maybe you seeing those things on TV on commercials. Colonial Penn, and some of those other places. And just in case you're seeing some of those things, those are graded policies, which means that your policy don't actually go into force for 2 to 3 years. Okay, so you have to make sure that you're working with a company that's reputable and that you understand all of the terms that are a part of your particular policy or offering. Okay, and again, I like to, I'm here to answer any questions for you. Now, with your permanent life insurance, there are four different types. Okay, you have whole life, you have universal life, you have index universal life, and you have variable universal life. Okay. And so the question becomes, the difference between the four of them really surrounds around how the cash value is actually built up in your policy. So all of these policies, like I said, they enforce the entirety of your whole life. Okay. And they do have different expenses or different costs or different fees associated with them. Now, with whole life, for instance, this is probably the easiest one. Whole life simply says when you make your monthly payment or your quarterly payment, that a portion of it is going to be allocated to paying for insurance, and then another portion is going to be allocated towards your cash value. Okay. Now, the money in this cash value account is actually going to accrue different ways depending on which type of policy you have. If it's a whole life policy, the rate at which your cash value grows is usually, number one, guaranteed. Okay. And it is fixed. It's a fixed amount and it's usually guaranteed. Okay. Now, if the company that you are working with happens to be a company that pays dividends, then part of your fixed return might also include dividends. Okay, so it just depends on if the company that you're working with is a uh, participating dividend paying um, insurance company or a non-participating dividend insurance company. All right, so that's whole life. With universal life, the payments associated with your policy, there's a little bit more flexibility in terms of your premium, and you have some flexibility in terms of your death benefit or the face amount of your policy. Those things can be adjusted up or down, okay, which can also affect your premium payment, which can go up or down. You can skip payments. You can use some of the cash value associated with your policy and use it to make some of your payments. So, Universal Life has a lot of flexibility that's built into it. Now, you can have a fixed return or a return that is variable. Okay, with your excuse me, you can have a fixed return and it can be guaranteed or non-guaranteed. Okay, so let's move on to index universal life. This is one of my absolute favorite products. Why? Because it allows you to get stock market like returns without having the risk of losing your money in the stock market. I know it sounds crazy, and you're probably wondering, how is that possible? Well, the way that is possible is um, the monies that's in your cash value account, that money is not directly invested in the market. Okay. So the company as a whole will invest, right? And they'll do their thing and do what they do. And as a result of that, Whatever your returns are indexed to or tied to, say for instance the S&P 500, then your return in your cash value account is going to be based on the return of the S&P 500. In that instance, if you had an IUL and you had cash value of $10,000, if it went down 2% for that year, my whatever my cash value is at that point, it would just lock in. It would not go down. If it was $10,000 at that point, it would stay $10,000. Beautiful thing about it. Warren Buffett said, you want to make sure that number one, you never lose money. And the IUL is a fantastic way of doing that. You never have to worry about losing money in the stock market. So, a lot of times people find themselves when they're getting closer to retirement. One of the things you should be doing is you should be adjusting what's considered your exposure to loss or your exposure in the market. So, as each year goes by, as you get older and older, you should be reducing the amount that you actually have in the stock market as each year goes by. So, then that way, as you are getting closer and closer and closer to retirement, you won't suddenly find yourself in a position where you're ready to retire. There's a negative year, and then the value of your retirement plummets. And that's what you don't want to happen. So that's one of the great things about how the IUL or the Index Universal Life works. If I move on to the variable universal life, the variable universal life insurance is actually where your money is invested in the market. So that that exposes you to potential loss in the market. With the IUL, I get all of the upside and none of the downside. In addition to that, the gains that you have in your IUL, it grows tax free. If you happen to need long term care as you get older, 70% of people over the age of 60, 65 will need to have long term care. Guess what? You now have um, benefits that you can actually access, right? That you can use to help take care of some of your long term care expenses. So if you become terminally ill, chronically ill, critically injured, or critically ill, now you can tap some of the resources associated with your death benefit. So there again, I highly recommend if you have monies, your retirement, most of your retirement that's sitting in a 401k or an IRA, that you really look at putting one of these potential products in force so you can start putting your money in a place where it is protected, where it grows very much the same way the stock market grows, but you just like Warren Buffett said, but you're not at exposing yourself to losing money. Okay. And the beautiful thing about it is, if you need to access some of the cash value, you can access it with a loan. And the reason why we say with a loan is because you want to make sure that your money stays in the account so it is continuing to grow for you. You would much rather want to take a loan out, have the money keep working for you, which generally speaking is going to be higher than the interest rate that you have to pay back, right? If you decide to pay it back, you can actually choose to pay it back or not. You can actually get a loan on your money. You don't have to worry about credit scores or a credit check, none of those things, right? So there are so many different benefits associated with the IUL. And one of the things I think is also great, I call it the have your cake and eat it too, which means your money can still be sitting in your policy, and via a loan, you can take out or get access to capital that you can also take and use and invest in something else. So now you're getting a return inside your policy. You're getting a return inside whatever you invested in. And all you have to do If you decide to pay it back, all you have to do is pay back interest, which goes back into your account. Let me tell you, this thing is absolutely wonderful, and I recommend anyone and everyone take a look at it. But it must be structured the right way. So you want to make sure that you talk to someone who knows exactly how uh, to set it up so you're able to get the maximum cash value in your policy. Okay. So I'll put a link below. And if you have any questions, please feel free to email me or inbox me. I love to answer any questions you may have. This is how people have been using wealth, been using life insurance over decades. Decades. Life insurance actually predates predates banking. And if you look at how banking operates very similar on some of the same principles. Banks, if you know, the top five banks in America, your Bank of America, Wells Fargo, JP Morgan Chase, Citigroup, those banks actually have $65 billion sitting in life insurance right now. So they know and understand the value associated with life insurance, how you want to make sure that you have your money put in a place where it continues to grow and it doesn't experience any loss. They know the value of it. You should be checking out the value of it as well. So life insurance isn't just for somebody dying, it's actually for you to live, right? While you're living, so you can actually build up wealth for yourself and for your family and allow you to be able to live, right? A lot of people do this. They're able to live a wonderful, wonderful lifestyle because of the tax advantage or the tax saving strategies that life insurance gives you an opportunity to take advantage of. So, email me, inbox me. I love to answer any questions you may have about this particular product. And as always, guys, take care. God bless. I'll see you on the next episode.